Welcome back. SEBI a few months back implemented new regulatory structure aimed at enhancing fractional ownership in real estate. This is for small and medium investors. KPMG and CREDAI have come up with a report on small and medium REITs explaining what the contours are, and it explores fractional ownership platforms in depth. To discuss more on the report and growth outlook for small and medium-sized REITs, Chintan Patel from KPMG India and Boman R Irani, President of CREDAI, is joining us now. Gentlemen, good afternoon. Thank you so much for joining us. Mr. Patel, let me come to you first up. You know, it's been a while since this particular regulation was announced. Have we seen more interest come by from small and medium investors? What kind of benefits do you see this pool of investors could see by investing in fractional ownership?
Good afternoon. Absolutely. I think this is just at the cusp. So the SEBI guidelines were confirmed in March. So this is a grace period within which a lot of the fractional ownership companies are now starting to look at following the regulation and list as what we call SM REIT now. This will definitely help and give investors a potential ability to invest in a slice of real estate. Historically, mutual funds, equities were all available, but for small and medium-sized investors, real estate was not easily accessible unless you were to own something on your own, largely residential. But now, if there was anyways an intent to own commercial real estate, which is definitely doing well right now, this gives you the ability to do that for small investors.
Good afternoon, Chintan, as well as Boman. Boman, if I could bring you into this particular discussion, give me the sense from both of the views. Number one, how does an investor, a small investor, actually benefit from getting into this particular platform, given the fact that he actually has an option in terms of actually going ahead and investing in a REIT which is listed? And on the other hand, how does a developer actually benefit from raising funds via this particular route? Boman, I think you're on mute. Could you unmute yourself?
I realize. Can you hear me now?
Yes, we can.
Okay, great. So guys, first of all, thank you for, raising this topic. This is so important for our small retail investors to understand that with the Jeffries report, we read that 66% of the Indian population invests in either real estate or gold. That means we are all about hard assets. We are all about real assets. With the advent of the REIT, what we saw was people were very, it was decentralized, or it was democratized for you to be able to own real estate without actually having to go and put up a large packet size. With the SM REIT, what has happened is the government has gone ahead and allowed for smaller assets, that is between 50 and 500 crores, to be listed as SM REITs. So this allows for assets within your neighborhood, in your area of knowledge, getting actually listed, and makes it a lot more visual for people to do. I'm sure there are tons of other advantages, and I'll let Chintan touch upon them. But what used to happen earlier was that an investor was allowed to invest 10 to 15,000 bucks per unit. Now he has to invest 10 lakh rupees. So there's a little more skin in the game of the investor. The REIT has got to be run professionally. The REIT has got to be owned 5% by the REIT or 15% by the REIT. Depending on the debt on it. Chintan, just clarify that part. I'm not exactly clear whether SM REITs also require you to own 15% if there's a debt. But this makes it a lot more lucrative for developers. And I'll tell you how. Because developers who are developing smaller properties, they can actually put these properties up for REIT, anything that is above 50 crores and up to 500 crores. And this allows for an additional line of funding other than the traditional debt that used to be allowed. So I think this will bring a lot more money in. And like Chintan has already touched upon, you want to be able to kind of invest in commercial property because commercial property is rising. And there's almost been a 3x rise in prices of commercial property over the last 10 years. And this leads to a very attractive investment that, is opened up to the public at large. So I think overall, a great step in the right direction. And then, we can ask more questions.
No, of course. So, Mr. Patel, let me come to you on that because we have been talking about how commercial real estate has been doing well. What kind of returns can small and medium investors see here? Is liquidity a problem? Could that be one of the disadvantages? Or do you think locking in your money for a longer period of time could be beneficial for you as an investor?
Just to kind of first answer, I think the piece that Boman kind of mentioned, right? The 15% and the 5%. So if your building is not levered, Boman, you're absolutely right. If your building is not levered, you need to hold 5%. If your building is levered, you need to have at least 15%. So that's the point. So just coming back to your point, does it really make sense? Because here the ability is generally when you own traditional real estate, you have to pay a lot of registration fees, stamp duty, a lot of that. You generally holding period is also longer because it's not easy to keep on flipping assets, unlike what you have in the traditional equity world. So what SM REIT gives you the option as an individual investor with the ability to invest 10 lakhs, and I'll come to a point on why that 10 lakhs is also a critical point, but just sticking to the point. So if you invest 10 lakhs, buy a unit, your ability to then use that capital as and when you need it without having to go through the full-blown process of buying or selling real estate, plus going through the registration, investments and all of that. You can own a piece of real estate by putting in 10 lakhs and then sell it when you need it. And in the period when you're owning the real estate, you can enjoy the returns. In most cases, if it's commercial property, then when you have a tenant in the building, they are paying rent. That rent, after all expenses, is distributed. In the case of SM REIT, unlike the traditional REIT, where only 90% gets distributed, under SM REIT, 100% has to be distributed to the owners. So that becomes an income for the period. And I think it's generally a fairly decent return is what I understand. And we'll see more once these SM REITs are kind of listed, and we'll see what happens on that. But so far, people that have made investments in fractional ownerships generally have seen good returns because the way the markets are also performing right now.
Boman, if I could bring you in, realistically speaking, after taking into account the cost structure and especially the kind of fees that the investment manager will be charging, along with that, there is also a regulation that requires you to distribute a certain amount of the money that you earn as dividend back to this particular or to the investor. So in that case, post-tax, what is the anticipated return that one can make, one can expect? And secondly, do you think going forward, listing onto the exchanges like a REIT is the next logical step?
First of all, just to add to Chintan's point, you're taking away 6% of the cost of the transaction by just taking away stamp duty, right? So that itself is number one. Two is, if we've seen investors generally want a clean, clear, non-hassle way of owning things. And that's why the equity markets are really growing the way they are. Now, when you take real estate, which is a real asset, and you tell people that there is zero hassle in it, you come, you buy one unit, and you've got it for yourself. Whenever you want liquidity, you can get liquidity on it. And through the period when you're holding it, you can get a return on it. And that 200% of the amount of money is distributed. With the original REITs, I think they were trading at 8.5%, so which was a good return at that point of time. And with the SM REITs, I think more or less you'll have the same. There will be managers who will do it a lot more efficiently and charge maybe a lower fee if they've got a larger portfolio of assets under them. And then there will be managers who will be there for the short term and then will have to exit the business. But that is a business call. I do not have an answer for you how much a SM REIT will get. But the one thing I can assure you is that investors will make a beeline towards this only because they'll have a lot more peace of mind in the investment process and will also save 6% of the value of the investment by only cutting out the stamp duty itself.
We take that point, and with the possibility of an interest rate cut, REITs in general become an attractive asset class to invest in as well. Gentlemen, we would have loved to chat a lot more, but we are having this conversation in the midst of thick earnings season, so we'll continue this some other time. But thank you so much for joining us today with your take. This is an interesting asset class and a regulation as well, so we'll see more progress on this one as well. We'll slip into a short break. We'll get you more on the markets and stock-specific action, a lot of them reacting to earnings as well, so stay tuned for that.